Okay, so we're looking at that pending home sales number month on month down 4.6%. Bad, but could have been worse, and revised upwards actually for the month before, but still low. What's your take on these numbers right now?
Yeah, and this is data from October. I think it's important to keep that in mind. So these are home shoppers who were still shopping when mortgage rates were up near 7%. Since, as we moved into November and we got the November consumer inflation data, mortgage rates dropped by about 0.5%. And they have hovered at this lower level as you were discussing. Markets expect the Fed to maybe be a little bit softer in response to reduced inflation data. I don't know if markets are right about that, but we'll see. Maybe Chair Powell will give us some more insight today. But as a result, mortgage rates have come down. And so that could potentially help going forward. And so I think, considering where mortgage rates were in October, today's pending home sales, not terrible, although certainly significantly lower than they were 1 year ago.
Danielle, good morning. It's Guy. This is a market that feels broken. There isn't enough inventory. There isn't enough stock coming into the market. Anecdotally, you talk to people that I work with, they are struggling to find a home to buy. They keep being priced out or beaten out from buying a home. And it seems like the market is really struggling right now. What do we need to do to ungum it?
I think it takes time to adjust. So we released our 2023 housing forecast today. And as you noted, the market is really stuck in making this transition. Mortgage rates have moved very dramatically up, over 350 basis points in the last year. It takes time for buyers and sellers to reset to those higher costs that they're facing and to adjust pricing. The first step is that transactions slow as people adjust to this new normal. And then it takes time to acclimate to what's going to be the right affordability level going forward. Right. The market can become more affordable if mortgage rates adjust lower. We've seen a little bit of that. I don't know how long lasting that will be. I expect that'll be a bit temporary, but mortgage rates could come down. That would help. Incomes could go up. We have a still strong jobs market that you were talking about, or we could see prices soften. And we have seen a little bit of softer price growth. We expect that that's going to continue going forward. We expect to still see home price growth, but at a much softer pace than we've seen over the last couple of years.
So Danielle, what is the reaction function of people when it comes to mortgage rates? Is it the absolute level or is it the speed? Because if we're off the peak, does that kind of help bring buyers in, or do we need to see sort of a more rapid decline in mortgage rates?
I think so the absolute level is what affects affordability, but then people, kind of become attached or start shopping at one rate. And so they set their budget based on that. I don't think they're always quick to adjust their budget, although there are plenty of online tools that make it a lot easier to do maybe than it has been in the past. But, not everyone tracks mortgage rates day to day. And lately you've kind of needed to track them day to day in order to keep up with the housing market. So I think we will see an adjustment. The other thing, though, is the trajectory of mortgage rates that matters. So as mortgage rates are climbing, that creates a strong sense of urgency for shoppers in the market to get in and try to find a home and lock in a mortgage rate before mortgage rates tick up. Now that they're past the peak and declining a little bit, that takes away some of the sense of urgency. So buyers don't feel like they need to rush to lock in that rate. They have a little bit more time. Sure, you want to buy a home and you probably have a timeline that's dictated by your life. You need to move for a job or for family changes or what have you. But that sense of urgency to lock in before mortgage rates tick higher is going to be gone. And so I think that's going to help both buyers and sellers adjust to the new normal in the housing market.
Can I just come back to the seller side of the equation? If you are a seller and you have a low rate, you are less inclined to sell because you are going to have to move to a house in which you're going to have a higher rate. As rates come down, how quickly does that change that equation?
Yeah, I think, a lot of sellers or a lot of potential sellers, so homeowners, have likely locked in rates, 3% or even lower, 3.5% or lower. And so I think we've got a long way to go before it's a net neutral for sellers to make a change. At the same time, sellers have built up substantial amounts of equity from both paying down their mortgage and from home prices being higher. And with lower interest rates that sellers have right right now, or that homeowners have right now, they're able to build up equity even faster. So you're paying more towards principal when you have a lower mortgage rate. And I think that's going to help them get to a position where the mortgage rates don't matter as much. And if you look at the amount of equity in aggregate that households have today, it's higher than it's been since the 1990s. And so that means that mortgage rates for those existing homeowners become a little bit less important.
Danielle, quick question. I'm trying to sell a condo on the Upper West Side of Manhattan. When should I do that?
When it's the right time for you to move. So
no, I don't live there. I want to get rid of it. When do I do it?
Okay. So if you want to sell now, I think it's fine to put your home on the market right now. It is going to take probably a little bit longer to sell than it has over the past couple of years. And you got to keep in mind that your potential buyers might have to stretch a little bit further if they're taking on a mortgage today because of the higher mortgage rates. But I think if you're ready to make a move, now is a fine time.